online travel booking platform Yatra.com will now list on NASDAQ through a reverse merger. And Krishna, I guess you have more details on this. This makes Yatra the second online travel platform to list on NASDAQ after Make My Trip.
Absolutely, Chandra. In fact, that raises questions on whether online companies do want to get a listing here in India, despite market regulator SEBI making it easier and relaxing those norms for online companies to get listed in the Indian stock markets. And as you rightly pointed out, it's called the backdoor entry for Yatra to get listed on NASDAQ. And as you rightly said, it's the second company to be listed at NASDAQ, online travel company, second one after MakeMyTrip.com. And the deal has been valued at $218 million. And keep in mind, co-founder and CEO Dhruv Shringi will continue to lead the team, and the current shareholders of Yatra will get about 35% in the listed entity, which will also be called Yatra. Keep in mind, Yatra for the year gone by had done about 2.8 million bookings for both air travel as well as hotel stays, and that is a transaction value of over $900 million, and that too with a growth rate of 25%. But these numbers don't present the complete picture, because keep in mind, Yatra did post losses for the last quarter. In fact, for the last several quarters. However, Yatra does have over 4 million registered users and connects about 60,000 hotels across India. And through this Terrapin 3, TRTL is a company which which filed for an IPO in 2014 and set up with the purpose for mergers and acquisitions and takeovers. And through this reverse merger, Yatra.com will find itself listed at NASDAQ. Chandra, back to you.
And Krishna, to really take this forward, our colleague Sumit Chaturvedi caught up with Yatra's co-founder and CEO to really find out the reason behind merging with Terrapin 3, why it's coming at this stage, what happens to existing investors, and what this deal really means for internet companies in India. Let's listen in.
So what we've adopted is a very innovative approach to financing, and this is a merger that's happening between a public listed company on the US stock exchange, on the NASDAQ stock exchange, called Terrapin, and Yatra. Terrapin will merge into Yatra's parent company, which is based out of the Cayman Islands, and through a filing of a proxy statement, Yatra will become the public listed entity and trade under the ticker YTRA. As part of this combination, Terrapin, which has about $230 million of capital on its balance sheet, will merge with Yatra, and about 100 to 150 million of that capital will remain on the Yatra balance sheet, and about $80 million of that capital will be used to buy out secondary shareholders of Yatra.
What are you primarily going to use this fund for, and what is the aim of finally going and getting listed on NASDAQ?
Sure. So the capital will be used to expand our operations, predominantly our organic business on the aviation side, on the airline side, on the hotels and packages side. We think India is at that cusp of high growth coming through again on the aviation side and on the overall travel segment, and we want to be better capitalized to be able to go deeper into the market. See, we are today at a scenario where you've got about 20 million international travelers, you've got about 75-80 million domestic travelers. Our sense is that these numbers are likely to double in the course of the next 3 years. Right? So we think there is this opportunity, and the government is also putting a lot of emphasis behind aviation. There's talk of tier 2 airports coming up, tier 3 airports coming up, the government incentivizing airlines to fly into these kind of markets. So we will see a whole new sector of consumers coming into this, into the aviation charter. And with that happening, we think the best way for them to come and book is through online and Yatra.com.
But why has this deal taken place after 10 years, since when you were founded? Is it because of the investor pressure, or because you couldn't scale up on your own? What is the reason for this?
Sure. In fact, it's the other way around, right? We are at a stage where our business has scaled up pretty significantly. It's at a scale which enables us to go public. As you're well aware, without having significant scale, it's unlikely that you'd be able to go public, and especially on a stock exchange like NASDAQ, right? So we've got enough scale now coming through, and that scale enables us to be confident to be public. Now, from an investor point of view, I think we've been very fortunate. We've had long-term investors, people who've been invested in the business for over 10 years, and they continue to support the business. So it's not really from an investor pressure point of view, because investors see the longer-term growth. In fact, our current shareholders will continue to hold anywhere between 35 to 60% of the combined entity. So it's not that the current shareholders are exiting.
Are your existing investors, opting out or going to log out of Yatra.com as a result of this deal?
No, they will not. So our existing shareholders might have a partial exit, but still a larger part of their investment will continue to be held in Yatra.
You are the second company after MakeMyTrip.com that is getting listed on NASDAQ. Is it because of there is no appetite in Indian markets as far as internet companies are concerned?
That's a good question, and we've explored the Indian market in the last maybe few months. We've had some conversations around that, but our conclusion was that from a depth point of view, it still doesn't have enough depth for companies like ours. Most of our peers, be it other Indian companies or Chinese companies or Latin American companies, are all listed on the NASDAQ. And to build trading volume in a stock, you need to have a healthy peer set, you need to have large analyst coverage, and that today exists only on the NASDAQ.
Why did you opt to go for a focused fund rather than going with a strategic investment?
We feel there is a lot of growth opportunity in the business right now, and I think with that being the case, we did not want to curtail our growth with a strategic investor right now. We feel we have built out a very strong franchise. We can independently continue to scale our business on the back of that strong franchise that we've built, and this will provide us with a very strong balance sheet, right? Our balance sheet will have $100 million to $150 million on the balance sheet, and that will be sufficient capital for us to grow the business in the near term.
If we talk about your rival MakeMyTrip.com, their share from the air ticket is coming down. What they're focusing more now on is booking. So what has been your experience so far? What will you focus going forward?
See, we've adopted thus far a more balanced approach in terms of having a multi-channel distribution and a multi-product strategy. We will continue to adopt the same because we feel that gives us better unit economics.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.